Buddy, we're getting ready to take a look at the S&P 500 as we trade October week 4. This month we get a full 5 weeks of options for the month of October. So we still have 2 full weeks of trading for this month. And this week we get Netflix reporting. I got to look a little closer at the calendar, but I think as we go into October week 5, we get that really big mega dose of all of our momentum names, Tesla, Amazon, Google, Apple, I think all report in that October week 5. So this week 4 is kind of our week to either maybe get a little bit of selling going and reverse it in order to get the big rally going ahead of all those earnings. Or maybe we are going to front run all of those earnings and then hold it steady and then get ready to dump it all once those people report, because then we have the election the week after that. So something to think about in the timing of things. Here is our intraday chart. The bright blue box always represents the initial balance period. We had a very wide range in our first hour, the IB period on Friday. We opened, we got our settlement price about 20 minutes in, and that's why we had sort of this sideways action. Over here on the right, 34.96.97. That is a new all-time high monthly settlement price, beating out by 110 points the one set in August. That was the previous record high at 33.86. So that is what sparked this rally about 20-30 minutes into the day. Once we got above 3,500, we went green on the weekly time frame. And once we got above 35.08, this got us into a chance for making a new weekly all-time closing high. So we rallied all the way up to 35.15 and then rolled over from there. We tried to consolidate for about 15 minutes on 35.08, but rolled over from there. We got down here to 3,500 and then broke that, and we spent most of the day churning back and forth trying to get above and stay above 3,500, and we put in a nice solid flat here towards the after we got back from lunch. And then as we got to the final hour, we made our way all the way back to 35.08, and it looked like we were going to break out over that level, but no, we had this vicious 5-minute candle, and it sort of kicked off this big selling event all the way down here to fill in the gap to Thursday's close, and even go so far as to look below Wednesday's low, all the way down here at 34.80. So we totally did a roundabout through the 80 handle rule. We looked above 3,500 and then we fell all the way back down to 34.80, and then we reversed and we wound up closing about 34.83 and change. It was brought to my attention, somebody thought that maybe this had to do with margin calls coming our way from the Robinhood traders. There was a lot of, all the talking heads on CNBC were talking about that this week. And maybe that is why this was such a vast and fast move down in the final hour on Friday, because I could not find any news. This is usually what a news-oriented fall looks like for us, but maybe indeed it was margin calls on people, and hence that fast move down at the end of the day. Anyway, here's our weekly chart. Here is our weekly candle, and you can see that we have what's called a spinning top for this candle. Basically, it's when there's a tight range between the open and the close for the week, and that range is set right in the middle of a candle with a very long tail above and below, so a high and a low, far above where we opened and closed. And basically, spinning top means indecision, the market just going in circles, spinning in circles. So hence all that time spent between about 34.80 and 35.10 or so, and just sort of churning and burning that move. Okay, so anyway, here is our daily chart. Here is the median line of this bull fork that we were watching this week. And you can see that we gapped up open on Monday and closed well above the median line. We came in flat on Tuesday and fell down below the median line and closed below it. And then on Wednesday, we kissed right up to it, the median line, and rolled over from there. Had we held above that 35.08, I believe that this was our target for the day. We were going to come back here to the median line once again, but that was not to be. Our 10-day simple moving average is rising up very quickly. It's going to be about 34.75 on Monday. So if that selling continues, and if that was margin calls beginning on Friday, that kind of activity could follow through to Monday. And if so, if we open flat and then roll over and start to sell, This 10-day simple moving average is going to get broken again. You can see here on Thursday, we took a little look below it and reversed, looking below the 10-day and looking above the halfway back for October. And since it's a new quarter, this is also the halfway back for the quarter. 34.36 was that halfway back, and we reversed about 34.40 on Thursday. So maybe if we come in and we break the 10-day, we're going to test and try to hold above 34.40. But if that breaks, we've got to trip all the way down here to the area of the 50-day and the 20-day simple moving average. So let's take a look at the roadmap. This is our, also a daily view, but it's got a lot more details on it, and it's in more close-up view. So here was that move down below the 10-day and that reverse above the halfway back point. Here is something interesting that's coming our way. The 20-day simple moving average is going to cross up through the 50-day. I don't think it's going to happen on Monday, but it certainly will happen by Tuesday. So that reminds me of what was going on back here to this big red candle. This was that day that Trump let off that tweet that made us sell 77 points down, breaking the 50-day and closing below it. But we turned around and we left this huge gap in our wake and gapped up open the next day and made this rally. And what was really fueling that? It was this event here coming our way. The 10-day getting ready to cross up through the 50-day. So this sparked a rally, and now we've got the 20-day coming towards the 50-day and getting ready to spark a rally as well. So I think what could happen is that classic thing where we really front load all of those momentum earnings that are happening in October week 5 by trying to take a run at the all-time high next week, and then maybe give it all back in October week 5 as everybody takes money off of the table just to have risk off ahead of the election, which comes our way the week after that. So that's something to think about. If we do come in and come in lower, maybe a break of the 10-day and a test of Thursday's low, and if that breaks, then maybe we're going to come down here and fill this gap and test above the 50-day simple moving average. But I would think that by Tuesday, we're going to wind up with another stupid gap up open that nobody is prepared for and go, because this same event is getting ready to occur here with the 20-day up through the 50-day. So indeed, if we do have some weakness on Monday, which will be exacerbated by a break of the 10-day simple moving average, by all means, get some puts and play that. But if we settle down and once we get our close and we settle down and figure out where it is that that we sell off down to, take a look at some calls, some Friday expiration calls, just in case we get another move like this where we sell off and then turn around and gap up open the next day. And of course, if we come in on Monday and all of that stuff that happening on Friday was just blatant manipulation, and we come in and we continue this rally on Monday, you will know it because we will rise above 3,500 and through 35.08. And once we hold some support intraday above 35.08, we should take off and work our way back up here, once again trying to get through 35.54 and into this final gap that takes us up to the all-time closing high and then the all-time high above that. Okay, before I drone on any longer, I'm just going to end the video here. I hope this helped you out. If you have any questions, send me a direct message. As always, good luck and good trading.